I'm not going to make this video very long. I'm going to make this really, really short and quick and sweet and simply to the point. A lot of people who, come to my channel, they don't understand stock investments. So basically, I'll tell you like this. There's really two ways you can go. You can either invest in a stock and you can sell it as soon as it starts to increase in value so that you make your profit then. Or if you're a person who wants to save money while earning real interest off of that money, but you're angry that the banks are only paying you 0.05% interest, what you're going to want to do is you're going to want to invest in dividend paying stocks. Now, a lot of you don't understand what that means. Basically, what it means is that if a company is showing profitability, they take those profits, they split it up, and they pay it back to the investor as a thank you for investing in their products. I'm going to keep this really, really short. I know there's a lot of stuff that I'm losing out on and I'm not saying, but what I'm going to do is I'm just going to tell you how it works for me. So if I had invested money in, the banks, like if I had put money in the bank and put it into savings, right now I'd be making very little interest. Instead, what I do is I invest in the stock of the bank. So as you can see, ISBC is Investors Bank Corp, C is Citi Group, I believe, and WFC is Wells Fargo. Now, I know a lot of people don't like Wells Fargo, but, me personally, they own one of my mortgages, so really I don't care. I was going to leave them, but I have an 843 credit score with them, so, it kind of makes more sense to stay. So, as you can see, Investors Bank Corp, for the money that I invested, they paid me $12 for the money I invested in dividends, and their dividend date was 5/26. So when you look at the breakdown of your stocks, you're going to want to know who pays dividends and when. As you can see, 5/26, 5/22, 6/01. The next payment that I'm going to get is going to be 6/04, and that's going to be from Bank of America. So that means what? Tomorrow, Bank of America is going to be giving me a dividend payment for the money that I have in the bank. I got I noticed now I got this, what is it? Today is 6/3, today is June 3rd. So June 1st, I got my dividend from Wells Fargo. That, as you can see, was $17.85. So, the bottom line is, what you're going to want to do is you're going to want to invest in stocks that pay dividends. And in my opinion, the banks and the auto companies are probably the best where you could be putting your money. Now, you don't want to put all your money in at one time because you're talking about a long-term investment. You have to have a long-term investment strategy. The whole point of dividends is that you're putting money in slowly instead of wasting that money. And the banks are never going to pay you that kind of interest. So in a year, the banks are going to pay you 0.05 in most cases. But for investing your money in stock in that same year, here you are, you're getting $12, $12.75, $17.85. The banks pay nowhere near this. And because the Federal Reserve had to decrease the interest rates, you can bet that the banks you'll never see this kind of interest from the bank. When I was a kid, I had a bank account with Republic National Savings Bank, and they were paying a solid 10% interest. This was back in like the late 80s or something. I remember specifically it was around the time when PlayStation 1 came out. That was like in the 90s, because I've had the account since like 85 or something like that. I think it was either 85 or 86. But the bottom line is the banks used to pay 10% interest. They don't do that anymore. So if you want to get savings to accumulate you some money, this is what they're talking about when they're like, oh yeah, well, if you put your money in the stock market, you would have made more money off it. The only problem is picking stocks and picking companies that aren't going to go under in some unforeseen economic crisis. The banks are pretty much the safest place that I've seen to pay dividends. Like JP Morgan Chase, I own them. I own, Capital One. So right now, all the banks seem to be paying their dividends right around May and June. There's also Ford, Chrysler, and GM. GM said that they weren't going to pay dividends because they had to remain profitable. So the bottom line is, when it comes to return on your money over a long period of time, for long period investment, this is what you're looking to do. Now, Tesla's getting close to $900. It's at $895 now. So by the time they hit 1,000 soon, I'm going to sell all of my Tesla simply because I want out of the company, and I'll have made a profit over $50,000 for just my Tesla. So what we're looking at right here is a watch list. And as you can see, these are the big oil companies: Chevron, Exxon, Shell, BP, and Sunoco, right? So basically, when you're looking at these companies, what you're looking for to understand how much money you're getting paid to invest in these companies, you're looking for the dividend yield. Now, as you can see, Chevron is 5.45%, Exxon is 7.36%, and so forth and so on. The most right here you'll see is BP is 10.57%, and then there's Sunoco, that's 12.52%. So if you keeping your money investing in these companies, like let's say like this, every year you're putting in, like, let's say maybe $1,000 into each one of these companies. Let's say you invest $5,000 a year. Let's say you invest $10,000 a year. Well, the only other option you would have had was to put that money in a savings account, and the savings account is going to pay you barely any interest. I'm talking about low interest, less than 1%, less than point. It's ridiculous. The banks have such a low interest return that you're better off going with these oil companies, or you're better off going with the banks. And that's the ex-div date, which tells you exactly when to expect your money. So I just got paid from a couple of banks, and I still have some ex-div dates already. And once that passes, you get paid. So look at this right here. Buy back the block was my portfolio where I was buying banks themselves. So what you got? You got JP Morgan Chase. I got them when they hit their low. Now they're $100 a share. Capital One was in the 60s. It was actually lower than that. So basically all of these 52-week lows, I kept making videos. I kept telling people, invest in this, invest in that. And I was trying to get people in for the low. The closer you get to the low, the cheaper it is for you to invest. Now, most of these banks, you can invest in partial shares. You don't have to invest in full shares. Like if I want to invest $50 in JP Morgan, I can do $50 instead of $100. It's just that I'm buying less shares. Wells Fargo is still low. Bank of America is still low. ISBC is low. And you know that they're low when you compare them to their highs. JP Morgan Chase was at $102 right now, but the 52-week high is $141. Their normal operating share price is definitely above $100. So the problem is you're trying to buy in as low as possible, and you're trying to keep funneling money into these damn things for as long as you can. So this is one way to make money off of your savings, but it's an investment. So basically you have to be on top of it. You have to watch it. But I'll tell you, these dividend payments will do you a hell of a lot better than the goddamn bank interest. Now, my oil stocks, which I told everybody, I did a video called I Am an Oil Man. I tried to get everybody to buy as much of this shit as I could. These are the small oil stocks, like these are the miners, and these are the energy companies, the smaller ones that are smaller than the big oil companies that I just showed you. Most of these do not pay dividends. So what I do is I pump money into them, I let them rise, and then I sell them and I make some profit like that. If that makes sense to you. It's you know, you just put some money in. Because they're not paying you long-term dividends, you sell them. And when you sell them, you cash in that profit, and that's yours. Also, cruise lines. I was telling people about Carnival Cruise Lines. I was on the shelf about the cruise lines because of the fact that right now nobody's taking any cruises anywhere, and coronavirus has fucked everything up. But once there's a cure for coronavirus, all these things are going to return to normal. RCL, Royal Caribbean, is $56 right now. When I told y'all to buy into it, it was in the 20s, and already they bounced up. Carnival it was $12. I was telling people to buy that one. It's up to $17 now. And the problem is this situation is changing so quickly because the low that we experienced in March was caused by this coronavirus. And now it seems that with the riots and shit, nobody gives a fuck about coronavirus no more. So everybody's trying to get back to normal. Then there's the airlines. Warren Buffett caused chaos in the airline stocks, but that doesn't mean that you can't profit off of it. I pulled out of the airlines after Warren Buffett sold his, because he came out on Friday. He said he was selling, so I knew Monday it was fucked. And that's why I made the video. I was like, yeah, you know what? Even though I was bullish on airlines, I was like, yeah, you need to get out of that shit now because Warren Buffett is going to send this shit into a tumble. So as you can see, United Airlines is still going strong in the 30s. Now, their normal is 96. So if you can invest in United Airlines, all of these things are going to continue to be low. But we're entering the summer, and as you can see, they're trying to regain their strength. JetBlue is $10. I was telling people about JetBlue back when it was $8. Honestly, I don't want to be bullish right now on airline stocks because the problem is the airlines, until they can return to normal operating of some type, the airlines are hurting, and they're going to keep hurting. And also, because the airlines use 36% of the fuel, that also means that until the airlines return to normal, oil can't return to normal because there's not enough use of the oil. So they were saying that there's like 200 million barrels of oil that are sitting off seas in ships. And that 200 million has become 500 million because they've been producing this stuff, right? So there's a lot of oil. There's a glut in oil. And even though oil prices went negative, that's over. And I don't think that's going to happen again anytime soon. The only reason why that happened was because everybody was quarantined and people weren't using oil. So there were a couple of other stocks that, I suggested. I told people about CTIC. You don't see that here. I told people about medical marijuana. Moderna was doing pretty well because I think they had like a coronavirus vaccine discovery or whatnot. But these were some of the stocks that I was telling people about when it came to coronavirus development. Now, some penny stocks, just in case that you try to invest in those. Lithium mining, because when we start making those electric cars more often, we're going to need lithium batteries until something else comes up. But lithium batteries are also found in everything. They're found in your laptops, they're found in your cell phone, so forth and so on. These penny stocks here, they typically do not pay dividends. And when you're investing small amounts of money in that, like you're talking about, like, for instance, PEMIF, right? It's 2 cents a share, almost 3 cents a share. These are stocks where you can buy a lot of it. Like you could spend $1,000 or $100 and you can buy 10,000. You can spend, what is this? If this is 28 cents a share, you spend $280 and you're buying 10,000 shares of it. If it even trickles up just a little bit, you make a good profit, and then you can sell if you want. But because these don't pay dividends, these are the ones that you don't hold on to for a long time. You only hold on to it as long as you think it's going to rise. These are all under $1, 0.9, 0.8, 0.5. That's 59 cents right there, 81 cents, so forth and so on. So my thing is, for long-term investment, you should go for the dividend yield stocks, the high dividend stocks, like the banks, the oil companies, and eventually the airlines. But for right now, if you're waiting for your money to come in and this, that, and the other, all you got to do is just wait, set your money aside, and you can get in when you can get in. And that's it. So basically, that's all I had to say.